Hey traders, Nick Shaheen here. I wanted to do a quick lesson on, I usually say, if you've known me at all, don't watch ticks, watch the levels. Because we are humans and we react to emotions. And this is the S&P. I'm going to go into a specific situation to illustrate my point. We had a pretty interesting day on Friday, the 25th of January. There were headlines, and the stocks moved in one way, and if I didn't know the levels, I would have done something wrong. And let me show you with pictures. So let me set the stage. Whoops, not that one. That one. Okay. So this is an options chain for the expiration that was yesterday on Friday. And I was managing an iron condor that I had on the SPY, and these are the legs that I had. I wasn't too worried about this one, but this is the example I'm going to address today. I was short the 267.5, and before the day started, we were fine. But then something happened in the day that would have shook many people out. So here's the deal. This was the open. It was a good move up, and then whatever. I'm still perfectly comfortable. We had a few headlines come out. We have a few silly moves. Shouldn't say silly. Unusual moves in gold ahead of something else, and then the dollar collapsed, and then the bonds rates spiked, yields spiked, banks, the XLF, if you visit the candle in the XLF, was very strange. Maybe I'll show you at the end. So we had a few things happen that were not usual, and there was like a headline, something about a government shutdown ending way before the actual headline happened, and boom, this happened. So I was short a little bit further up here, 267.5, but on this burst, the premiums of my trade, this one, expanded fast. So if I didn't know levels, I would say I would have probably been chickened out of it. Emotions will say, oh my gosh, you get a hot flash, you want to close it. But knowing levels helps. And what do I mean? I mean, there's nothing to see here. That's because I have to look at different time frames. This is a 5-minute candle, so it's not going to show me a lot. And so I expand. Since I do homework, I know by heart that there are levels to look at beforehand. So, but I still have windows that show me that, and I usually refer to them constantly. And here's one. This the same SPY 30-minute candle versus it being a 5-minute candle, and this was that candle I was telling you about, that big green one right there, the burst. And I knew that 266.65 had a granddaddy 267.05, which was a major failure level. So I know that it won't be butter, and onus would be on the bulls to go through it without another headline. And I knew that the headline of a government shutdown reopening, basically the government reopen headline, is a relief pop. It doesn't change anything. It just takes away a bad thing. So it's got legs and it fades. So it's a relief pop. These are usually shortable. So this, with the level, I knew I had defense, and I had another 45 cents above that. And only an hour to go, or 2 hours to go, whatever. So my finger was on the trigger for sure to see, we've seen 3% moves before, not too long ago, and I didn't want to get caught with it. So I was emotionally involved, but I had levels to help me stay the course until I see something changed. Also, I knew that my break-even was higher because I collected about 50% of the width of the spread, so I only had 50% at stake. So the trade ended up a winner with a huge yield because I collected almost as much as I risked. So you can say it yielded 80% plus after fees. But these are not typical trades, and it's an iron condor that needs attention, like this example right here. Who wants to watch a monitor into that has another job into the closing every minute? These are active trader setups, but these work on a longer time frame. So it doesn't change. The fact that I was managing it minute to minute, this applies if this was not today and 100 days out. Same thing. If I see price approaching, I look at prior levels. This would say probably weekly. And I will see, okay, you know, I've seen this before on a weekly basis, so let's see if the bull can take it above this on a weekly basis. Same decision process, different time frames. And this applies to every chart. So the lesson today really is simple. I don't trade ticks. I try not to. Every once in a while we fall to it. Because the ticks are emotional. You see a burst. Where was that first one? That one. That is pretty scary. You see a burst and you want to react to it. And to make matters worse, where's my... Okay, I lost my cursor. Too many monitors. Okay, so I'm watching this one as well. That was the XLF. When bonds collapse intraday, yields rally, and the machines are programmed to buy banks and financials with a rally in yields. And that's the candle that ensued. What's the big deal? It's not that much higher. Look at the size of it. The fatness and the height of the candle tells you how much volume there is to it. Look at all the volumes around it. These are closing volumes. They're usually huge. And this is a Friday closing volume. Look at the volume on that one tick. That is a scary tick for somebody who's short, whatever. And I was short the SPY, and that was going against me. So emotionally involved, that's what I'm saying. Ignore it if you have this. Knowing I had that, I bet you I can find a comparable one at the XLF there. So I was looking at multiple things, so I knew what was going on. I knew a level. I don't react to ticks. That's it. And that applies to any ticker. I don't even need to know fundamentals. If I know that this chart moves with that, and this chart has this level and that level, then I'm able to make a decision based on data and an intelligent decision versus an emotional one. All right, Nick signing out.